What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. This is the show that I do Monday through Friday. That's 5 days a week. We use technical analysis to really get a good idea as to where the market is headed. Next, in today's show, we're going to be looking at the S&P 500, Dow Jones, Russell 2000, NASDAQ 100, and then we're going to be going into some indicators, and then I'm going to wrap it around with the conclusion. With all that said, let's just go ahead and hop into today's show. Wait a second. Santa Claus is now Coco. Oh, you see what I did there? All right, let's get into it. All right, welcome back. We're going to get into the indices right now, starting with the S&P 500. Today was a very interesting day, right? What happened towards the end of the day? Some poor news around Pfizer and not being able to deliver on all those vaccines that it once promised. Honestly, this is kind of just a temporary road bump in my personal opinion. I kind of felt like that was eventually going to come. But what is very important that I'll go through on these charts is I want to point out just the force of that move to the downside. Because what people need to understand is when stocks move up, they typically take the stairs up like so, and then the elevator down like so. And what we saw today was a glimpse of just how powerful some selling can happen and how quick it can take place for some downwards momentum. Now, this is kind of why I've been also saying, we got to be very careful as a breakout trader right now because of the fact that, one, we're moving into all these overextended areas, etc., etc. Now, when we look overall, the S&P 500 on the daily time frame, let's just give credit where credit is due. It broke out of this symmetrical triangle. That's a bullish type move. All right. And I finally drew in these blue trend lines. It could be technically a rising wedge, or I just drew it as a channel, an up channel. And what do we got going on? Well, first off, this big move was propelled by just a lot of aftermarket sessions, big gaps to the upside. We broke out, and then we continued to kind of drift a little bit higher. Okay. We're still holding the 5 EMA, the bulls are. Notice the weakness kind of just appearing right here with that. This right here, that candle is a doji candle, which could mean a potential short-term topping area. Don't hold too much weight onto this just because we still don't have the 5 EMA. What do the bears really need to do in order to get a successful pullback here? Well, not only do we have to break through 3650, the 5 EMA, these previous gaps, and we're going to get into more of these gaps here shortly, but then it really has to honestly cross below 3500. And even after that point, there's still all these gaps down here to potentially go long and play some long plays as well. So really, there's just a lot of pressure, a lot of momentum to the upside. However, things are getting toppy overall just from a standpoint of overextensions, and I'll show more about that in the conclusion. So keep in mind, daily time frame, we're in this up channel. We broke out, bullish context, right? And we're seeing just a slight weakness and pretty strong weakness at the end of the day, but that's typical to see a lot of selling pressure towards the end of the day, or buying, or just basically overall volume at the end of the day. So now we're on the 2-hour time frame. You can look at this as just a channel. We're pointed out as an ascending triangle as well. We have all the gaps laid out, and really for the last 3 days, first off, we gapped above this resistance. We got above it by a big aftermarket gap. Then we came back and retested it, and we've really just been testing going sideways since the beginning of December. Now, if seasonality plays a role, typically we see some pretty big sales orders take place the next couple of days. Now, tomorrow is Friday, and the VIX usually moves to the downside, and it has been on Friday. So that could propel technically the market up higher. So seasonality might not even have a play in any of this. So what do we got to watch out for? I'm going to show you on the 30-minute time frame what we need to watch out for. This is the 30-minute time frame. Before actually I get into a zoomed in picture of the 30-minute time frame, what I want to just show is, notice some of these gaps that I was talking about, these gap ups, gap ups, gap ups. And really, to fill the gap, you need to close the entire window. But what I find funny is these gaps have not been, obviously they haven't been filled, but they're really coming back, and instead of they're finding support not at the closed window portion, but at the basically entrance of it. So the window was created and it was never repaired, right? So window not repaired. Basically what I mean is, yeah, there's a gap in the market and it hasn't been filled. But notice just kind of what's been going on. I can even zoom back further, but a lot of the times what you see is the gap the gap up, it moves back, and it back tests kind of where it gapped at. Right here, the same thing, boom, same thing. And then right here, boom, gap up and tested just where it basically opened up from that original gap. So something to kind of just consider. Also, something to consider is just the higher lows and the higher highs taking place, and it's kind of consolidating and coiling up a little bit tighter. You can see this big drop towards the end of the day. Let's zoom into it so you can see more specifically where are some key areas of support for this broader market index, the S&P 500. Okay, so here's that gap below us that got us above the main area, and it's been basically 2 times where this area was tested, 36.45, 36.50, kind of that range, all right? So this zone right in here is going to act as a lot of support, and the zone is quite big, so the bulls have a lot of, just a lot of, firepower in these areas, I should say. So we got 36.25 basically up to 36.60. The bears have a lot of work to do. Now, I mapped out a couple key levels, so you can see from here we gapped up, we got above it, and we back tested right here at this level. This is 36.56. And then when we did gap down below it, notice how this was the top of that hammer candle, and then we broke above, back tested it, back tested it, back tested it again. So it was once support, it was once resistance. This is going to be a key level for the bears to take over or for the bulls to hold. How can you position trade plans around this? Well, you can, if you're an intraday trader, you can literally just buy in right above these specific lines and then have a tight stop loss. If you get stopped out, honor it. And then you could do it again right down here. If you get stopped out, honor it. And then you have a third try right down here if the price continues to move down and you're trying to buy, a dip or a short-term trade. The resistance that we need to work through as far as, what do the bulls have to work through is 36.75 basically through 36.80. It was acted as resistance, 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 and resistance. So it's a little bit of a zone right here. Clearly, it was an all-time market high right up in this range over just 36.80. So there's going to be some resistance up ahead. Clearly, when we got into this area, I actually happened to place a trade earlier today, and I'll show you here on the 15-minute time frame why I placed the trade. Well, the first reason why is I was just noticing this channel to the upside, and I was planning on doing it right around this range over here, but decided to pass on it, and then said to myself, okay, so if tomorrow comes and it comes back into this area, I'm going to go ahead and short it. So what I noticed was a negative divergence on the 15-minute time frame taking place, and I literally pinned the top right, just almost spot on, just 5 contract trade, and then the move was so forceful to the downside. This was not even knowing that there was, the news around Pfizer. I just entered into the trade thinking I'd hold it multiple days to potentially come to the bottom of this channel. But the move was just almost instant and so forceful to the downside. I scaled out one contract, another contract, another contract, and then I was like, I'm just going to get out of this. And, it was a quick little $289 or almost $260 profit, I think it was. So pretty successful trade. Now, if it was not as aggressive as a move, I would have probably held into it. But you know what? That's my bad. I prematurely kind of got out of that one. Dow Jones, let's talk about that. Dow Jones, this is interesting to me. So on my Twitter, I posted, we have a very bullish type bull pennant pattern formed. And first off, we broke out of this range. Mind you, is from just a massive gap, and then we've been consolidating sideways, but we are putting in higher lows. That's bullish. Now we're really struggling to get above 30,000. I personally thought today was the day where we were going to hold a close above it, and then all of a sudden we got crushed down to the downside. However, we're still above the 5 EMA. The 20 period is sloping up higher. Pay attention to the MACD. It's losing its steam. It's losing its momentum. That doesn't necessarily mean anything. The RSI is still riding high. So it's very well positioned for a potential breakout and move higher. However, once we get into, I don't even think I posted on here, but on my Twitter, when I showed a monthly time frame of the futures, and you can just zoom out so far away and you can just see the trend line that it's running into if it were to break out. So you got to be very careful playing these type of breakouts. Yes, they can continue and move on higher and higher, and the market can continue to get pushed up. But make sure that you're adjusting for that, okay? Make sure you have stop losses in place, and you want to move your stop loss as quick as you can to your entry point so that you can minimize your loss almost completely. Now, keep in mind, if it's after hours, you can get a gap down and your stop loss can get triggered in the morning. And, for example, if you play a breakout and your stop loss is up at 31,000 and you're like, yes, 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 but then you wake up the next day and the stock market is at 29,800 and your stop loss was up at 31,000, your order's going to get triggered out down here, depending on if you're playing the cash market. So now here's the 15-minute time frame, a little bit more zoomed in, I guess you can say here. Negative divergence on the RSI. We pulled down back within this ascending triangle. This has been pointed out by many, many traders. You can just see the struggle getting and holding above 30,000. Now, why I think that this continue and move potentially higher is simply just because, one, the trend is very positive, and this big, huge move has to take a breath and consolidate sideways. So that's what it's been doing, and it's been putting in higher lows, just these stairs to the upside, and higher highs as well for the most part, just really struggling to hold above 30,000. What can potentially take place? Well, if we start breaking down through this area, we might find some short-term support in like these gaps down here, and then I would say, potentially right here at about, where is this at? 28,850-ish right there, and then also down here, which is at 28,400. That's that big gap that really got us, into a consolidation. Russell 2000. Now I redrew this out. I had a rising wedge, and it still technically broke down from the rising wedge, but there's not much momentum going. What do I want to point out here? Well, first off, it almost had a negative divergence on the daily, and we called that out a couple of days ago or yesterday or something, where it looked like, okay, if it goes higher, it's going to do so, and I believe that it's going to do so on a negative divergence, which can be not the greatest, especially if it gets confirmed and we move lower. Now, what's also interesting is the RSI is getting back into the overbought territory. Not quite there yet, but it's just about there, and it was there just recently overbought. And then it trailed down. Now, things could stay overbought for quite some time. You can see from basically here, it's been trading the high portion of the RSI, so it can do that for a lot of time. And typically market tops, before they start rolling over, they can take a very long time to turn the trend and then get aggressive pushes to the downside. So this type of movement is normal. Overall, though, if you look at this from a bullish perspective, you have a big move to the upside. Mind, yes, all the gaps. The stochastics is a little bit overbought, but that's okay. It can hold there for quite some time. And then we have kind of this cupping sort of pattern taking place, this base building. So if it gets above 185, that might be the potential to move it another leg higher. But like I said, it's a bullish context in this shorter term chart. But when you zoom out, and I'll talk more about that on the conclusion, it's in overextended territory. So, bullish trades in a potential bearish context from a long perspective. So you got to play it very, very carefully in these conditions. Unfortunately, that's just kind of how the market is at this particular point in time. Let's zoom in a little bit. And on the 2-hour time frame, we were pointing out the bull flag. We broke above it. It looked very solid. And then we started getting hesitation and back tested it right from the previous market top. We didn't create an all-time high on this, and that's what I was really hoping that we would get, was another all-time high on a negative divergence, but we didn't quite get it. But we did break out, we did back test, so now it's going to be interesting to see how the aftermarket session plays out into tomorrow, and then just, I guess how the cash market plays out too tomorrow, because we're going into Friday. And like I said already, the VIX on Fridays typically gets pushed lower, which can send, the S&P 500 higher, and that's the broad market index. We might see the Russell go as well, but we'll keep an eye on it. 15-minute time frame, you can see this really more zoomed in, kind of just this whole cupping pattern, a lot of resistance up at 185. We saw a slight negative divergence right up here, and then, it trailed sideways and then crashed down to the downside on the news. Now, that news is, like I said, maybe you shouldn't put too much weight on it. Maybe it's a big deal, but I'm pretty sure Moderna or somebody came out just recently and said, we can handle 20 million doses. And so, yes, it's going to go back and forth, and it seems like the market's trading on these news headlines. It's good news that we have the vaccine coming out. That is positive for the market. But it's going to have its own complications as time continues. So we got to just be mindful of all of that. Let's look at the NASDAQ 100. NASDAQ 100, very strong. You know, we broke out of the symmetrical triangle, continued to press higher, but these last 3 trading days have been nothing but odd. They haven't moved really anywhere. As you can see, we pointed this out yesterday. We opened here, we closed there, then we gapped down, and then we closed exactly in the same exact place. And then today we have somewhat of a gravestone doji. I believe that's what it's called. And that's really just an indecision, potential topping type pattern or candle. We saw that right here, whereas a doji candle where you saw really a lot of bearish action, but then it came all the way back up to the top range of the Bollinger Band. And then that was a pretty monstrous gap to the downside, and we got that push lower into mid-September. Now what we're seeing is a fairly similar candle. I mean, not to that extent, not a hanging doji, whatever. I don't know the names of all these things. I just know the psychology of them. But you can see it basically was only up 0.09% today, so really didn't even budge at all. It went higher, got extended past the daily Bollinger Band, upper Bollinger Band, and then got rejected. We're still above the 5 EMA, and there's still a gap here. So we might get a little snapback and then a continue higher, but we got to just pay close attention to where we stand right now and where we stand in the past at the upper Bollinger Band, what typically takes place. All right, let's go into the 2-hour time frame. We had a negative divergence, so we got to monitor this. Broke out of the ascending triangle, bullish context overall. So this trade is positive. Keep in mind, I was talking about this back test right here, but it kind of left a little bit of a gap. I'd consider that a back test, but if we're being extremely technical, I guess, you know, there's still a gap there, and that can potentially act as support. The 20 period sloping up. Just keep an eye on the negative divergence here. That's going to be a big one to see how this one plays out going into tomorrow. Now it's time to talk about some indicators, and then we're going to hop into the conclusion section. Falling wedge in the VIX. Like I said already, VIX sometimes gets crushed down on Fridays, so we will see what happens. We almost darn near broke out. I actually kind of restructured this falling wedge just slightly, just to make it touch more of this upper trend line. It looked like we were on our way to break out, but we didn't get quite there. So, you know, once we do start breaking out, I don't see why we can't reach that. My target area is around 2750. Could go higher than that, but, you know, I would imagine if it goes to these levels very fast, we might see some contraction and movement or consolidation to the side. Here's the put to call ratio, smooth over a 10 period moving average. This is the total put to call ratio, and this is what we use as that sell signal. We continue to push just lower and lower right now. Notice I'm just pointing out right here in September, we're coming into that area. Maybe potentially this might act as somewhat of a double bottom. Maybe we even go lower. It's really hard to say, but it's something that I noticed and something that I want to point out because right here was the September high, and then we saw the market pull back. Now, when the line crosses back through the red line, the 0.8, that's typically the quote-unquote sell signal. But that doesn't necessarily mean that that's when, you know, the market completely falls apart or anything like that. These are lagging indicators, and I smoothed over 10 period moving average just to give us, you know, more precise just action in the market. So when we cross above it, you can see when it crossed above it here, yes, it was moving down previously, but then it kind of sloped down more. When it crossed here, it was right around this range, and then we moved down more. When it crossed above here, we moved down, crossed down, and then crossed back above very fast, we moved down. And then same thing right here, when we crossed above, we went down and slightly sideways. So it's been powerful so far this year and previous years. We just got to keep an eye on it. Here is the AAII sentiment survey. I went over this, I believe, yesterday. Just notice a little bit of an uptick in sentiment, still a negative divergence, and also in the ratio itself, negative divergence. And these are extreme levels, okay? So not so much on the AAI bulls right up here, but for the ratio being above 2.0, it's a negative divergence at an extreme level, and I wanted to just call that out today. And then we got the NYSE-McClellan Summation Index. This is the fast stochastics, max overbought. Mind you that this can last for weeks at a time. So yes, and typically when we get to max overbought, we can see moves, sharp moves to the downside, but it can also hold up here for quite some time. So we got to be mindful of that. And then we have the CPCE. This is the equity put to call ratio on the monthly time frame. I'm seeing more and more people bring up this chart because it's just insane to me. Look at this, is as far back as it goes. We've never been this low. 0.35, just extreme bullish, just It's just bullish right here. It's crazy. And typically when you see markets move to these low levels, you see a lot more volatility pick up from the peaks and troughs in the markets for the following 5 months. So expect to see higher peaks and potentially lower troughs in the near future. Just volatility picks up in these ranges. So we got to be mindful of that. Let's wrap this up with the conclusion. So I've really been talking about more of the daily charts and then the smaller time frame charts from a bullish perspective because, mind you, they're in bullish context. However, what I've been beating into everybody is you need to be very careful investing and going long at these specific levels. Mind you here, this is a long term, going back to 2012, monthly time frame. We are over the monthly Bollinger Band, right? No, let me see. 366. Yeah, we're over the monthly Bollinger Band, I believe. I can't tell. Let me see. Closed three. Oh, look where we closed. 3666. That's a scary number right there, right? Minus the 3. 666. We're up over here and overextended. I don't know if that's a sign. It's probably not. It most likely is not, but that's funny nonetheless. And then the upper Bollinger Band is at 3661. So yes. Now, mind you that this big green candle and then we got continued momentum. This is bullish for the most part. Just note that it's okay to be in bullish context and still be bearish, like a bearish trade. And the reason why is just because of certain levels that we currently stand in. The upper Bollinger Band being this overextended is pretty dramatic. And then you look down at the MACD. Just look how separated the MACD is from the other line here. And it's pretty much pointing straight up to the sky, which is, have you seen that happen before? No, not really. You've seen a little bit right here, but not nearly to that extent. And then you saw that pullback there, and that was in that 2018. And then you even had a bigger one pull back right down there. So pretty crazy. It is just pretty crazy. And then another chart is the semiconductors. We start continuing momentum to the upside, and we're above the upper Bollinger Band, just very frothy RSI. And now we're starting to see a upper wick form. So how much more steam is in this trade to the upside? Maybe we have a lot of steam, but just mind you, you need to be very careful trading going into these markets. You're starting to see and you're starting to witness a lot more chop. This last month, it was very easy. You place a trade, you hold it overnight, you wake up rich. Not maybe not rich, but basically you ended up, and then it would just ramp up higher, and then it would camp sideways. What we're starting to see now, we saw a little bit of a gap down, but then it ramped back up, and then we're seeing a gap up, but then it kind of comes down, and we're seeing a lot more chop take place. Okay? So it just goes to the narrative. If you don't feel comfortable in choppy environments and you don't know whether you should be long or short, what you should do is probably just lower your position size while you're doing these trades. It makes it a little bit simpler. And then you got the weekly time frame, same thing, overbought, overextended. And the semis, the reason why I'm showing you the semis is simply because it makes up a big portion of the NASDAQ. Okay, it makes up a very big portion of the NASDAQ. Then we have the rising wedge on the daily, and now we're kind of creating a little bit of a bearish type candle right here where we have an upper wick, not that big of an upper wick, that got rejected by the upper Bollinger Band, and then we closed on almost the low of the day, but still overall we were only down like 0.01%, so really nothing. All right, so that's really all I have for you guys on today's market brief. As you've seen today, and I posted it out on Twitter. If you don't follow me there, you can follow me there on Instagram. I do plan on posting more stuff there. It's just been a little hectic these last couple of months for me. As you can see on all of these charts, what I'm trying to really get across here is just you need to be very, very cautious in a long position right now. It's okay to be long, and it's also okay to short or hedge your long positions at these levels. When everything is fully bullish, what you can see is very, very quick signals to the downside, and that's what we kind of saw today. Within just literally, it was a snap of the finger. No one can move quite as quick as the professionals and the algos when things start triggering to the downside. Now, the move doesn't look big on a daily time frame, but if you are a day trader, or if it does start preparing big moves to the downside, either after market hours or during the cash markets, you need to be able to, one, know that you're protected and have some peace of mind with a stop loss, and that you honor the stop loss, because things can get away and things can get away quick. Now, the overall downdraft today, nothing to really worry about. You need confirmation on moves like that. Okay, so we didn't get confirmation. It's nothing as of right now, so I'm not putting too much weight on that move. All right, guys, that's all I got for you on today's Daily Stock Market Brief. Ooh! See you later.